Well, if it would if they can sell it into the U.S. market, Tom, because in the U.S. market, the copper price right now about $5.60 a pound is about 20 to 30, about 20, almost 30% above the same price it trades in London and the rest of the world. That's those tariffs kicking in. So any way to get copper to the U.S. and sell into that market is wonderful. The problem is copper in London is actually looks like it just peaked around $10,000 a ton. It's right now the equivalent of a U.S. price around $4.40. So that premium in the U.S. is really shocking. The key thing I like to point about copper is remember 2008 when the first time ever the U.S. average gasoline prices pumped up above $4 and crude oil peaked around $147 a barrel. That's what I see parallels with copper right now, pumping up like this. It might be one of those things that really pressures that U.S. stock market lower. And the U.S. it's just a tax on material costs, and it's really not good for the U.S. economy.
Paul, can I impress you?
Sure.
So I'm at the Dorchester Hotel in London.
Yep.
It's the mining conference.
Really?
I'm there with my intern Rachel.
Okay.
She's got a drink with an umbrella in it.
No, not
okay.
good.
And I learned that they spell ton, Tonne.
Really?
That's what they do in England.
All right. That's
it's
how
like
they do
spell the whole thing's different over in
the
London.
whole thing is different.
Pharaoh says it's better. Continue.
So, Mike, here's the dumb question today. Where do we get copper? And once it comes into the U.S., who pays this tariff thing?
Well, that's the key thing. Anybody who uses copper, the auto manufacturers, material users, housing, construction, certainly buildings, they all have to pay that copper price. The key thing is we import about 40% of our copper, and we do have a massive amount of scrap that we export, so maybe we need to fix that. But right now, it's just a discombobulation of the price on that refined copper that needs to be fixed because of tariffs. It's going to take a little while. There's definitely going to incentivize production in the U.S., but I think this 50% tariffs is really a feint. It's way too high. The industry is going to push back on Mr. Trump and say, hey, by the way, you're really going to hurt our economy with this. Probably not a good idea. We'll get copper production back in the U.S., but maybe not so fast. So to me, that's a key thing to remember here is this copper, I mean, the world's electrifying, and this is a big difference from 2008 when it was really about gasoline. That doesn't matter as much now, but copper matters a lot more than it did 17 years ago.
Yeah. I mean, so how would you characterize that trading yesterday, that surge in the pricing on the CME?
It's a wonderful trader's market. The traders doing the ARB, long that U.S. versus short LME are doing fine. They just did very well. But that spike to $5.90 is really suspicious. I mean, their previous spike was too. It was a bit of a shock. And again, it was one statement from Mr. Trump at 50%. Maybe he ends up 15%, which seems more logical.
And John from Coventry emails in and says, thanks for quoting LME. LME is far superior to Chicago. Mike McGlone, for our listeners like me that are totally unsophisticated, does AI, ChatGPT, Google this, Bloomberg AI, all of it, does that mean more electric capacity, which means a legit copper shortage?
Well, there's a bit of a legit copper shortage. There's definitely demand pull from electrification. And you nailed it, Tom. You need those copper wires for everything. There's really not a major substitute for that ability to transfer and transport electricity. Aluminum kind of gets there. It's not even close. So it's at the wrong time. And that's why I think this little comment from Mr. Trump yesterday is going to be pushed back, particularly with this price is high. And if you're a trader, you got to be very careful being long copper here because it can easily drop, U.S. copper, drop 20, 30%, and it'd still be expensive versus the rest of the world.